Welcome to Commodities, and here we're looking at gold. And yesterday we were counting 5 waves down from this particular high down through to here, down through to this point here, and we were looking for an A and a B and a C wave coming back into the 50, 61.8 retracement level. But also importantly as well, we know that normally from group 2 here, 65, 72 and 80, we normally get a retest of the closest largest number. And that's what we're looking at. So if I just drill in here for a moment here, this particular rally from the 1260, 1276 area here, it counts probably best like this here in terms of 1, 2, 3, 4, 5 for the A wave, an A and a B and a C, an expanded flat for the B wave. And an expanded flat normally dictates that the next move will be quite strong. So we're still looking up above the 1290, 1295 here for a 5-wave sequence up through to here, and then failing from that point. Now, if I'm wrong, then I would be wrong in the sense that from this high here, we have 5 waves down here, and we'll be looking for a 61%, 62% retracement level of that distance here, and then folding over to the downside here. So first of all, we'd like to keep, because if we do get the rally here, as a retest of 1300, we want to keep our stops above the 1300 up here. So that's where you need to have your stops. If you're going to be adding to the trade or entering the trade, then taking the break of this low here, which in fact would be better to either have this as the retested resistance, this number here, or if this market does come down here, it will bounce back up through here. But just the fact of taking that low out here creates a bearish picture. So we could look at a move down to here, the bounce back up here. And if you can read that bounce in 3 waves, then you can look to glean a position on the short side there, and then look to add under here. The 1272 is a very critical number as well. Once this number here becomes the retested resistance, then we know that it's weak at that point, and it's a really good confirmation that that number there, the 72, and it becomes stronger when we have a not only a 72 but a 272 number like this one, or a 772. Alrighty. Just have a quick look at silver, just without the wave count here, just on the 1-hour chart here. It's got sort of reoccurring patterns to the downside here, these corrective patterns. We can expect a sharp move down in due course. The 1950 here, the 55, the second strongest number, the 50 is the midpoint here, and it's also not only the resistance psychologically where the orders will be, it is also where the supply will be coming down from as well, meaning sellers. So the sellers are moving down and really, cementing that low there. Look, it won't be good trading all the way through here into group 1, 10, 20 and 30, because orders build up at 10, 20 and 30, and you'll see bouncing choppy price action from there. So if you are shorting, don't put stops close in here. Once the 1920 becomes the pivot within group 2, pivot's always number 2 within group 1, and once the 2 becomes the resistance there, then you know that you'll be heading below the 1900 at that point there. Okay, the copper market is still strong, so the materials sector globally are still in good shape, and while this market's above 302, it's positive, and doubly so once the 305 establishes itself as a stronger support. It's trying to do support at the moment, but it's only young and would need further support there. But it is positive being above the 300. It's definitely positive being above the 302 here, the pivot within group 1, and the 305 is 5, the second strongest number, and it's the midpoint halfway between 300 and 310. The next one is the strongest number in the market, and this is the minor level here. These are all sub-levels. So anyway, look, it's positive, but it is a corrective rally in a wave 4, and it's still continuing. The oil market's trending to the downside, and we'll still have further to move to the downside as well. So we're looking at this green 5-wave structure here that can come down here further. It's probably the wrong counting in green in degrees of structure, but it just points out where it's sort of heading to. And we're in the wave 3 at the moment. So in wave 3 there'll be 5 waves, 1, 2, 3, 4, and 5 here. Once again, we're in group 1, 2, and 3 here, so we can expect choppy price action for there. We can have a little bit of a look in here, just breaking it down. So we've got wave 5 of 3 on 1 here, 101, and wave 4 here. Wave 4 is normally complicated, so it may end up in a few more swings as such, but probably reoccurring pattern. So this pattern here, probably the same as this pattern here, just larger because of a larger degree of structure. But main point is it's down. But the time it gets down to here, the market will be oversold on the daily basis. So expect, don't be heavily short in this area. You want to lighten up as it goes down. The gas markets, well, it's it's chirpier than oil. However, look, basically, in a nutshell, this is Group 2, 65, 72, and 80. While the market is in Group 2, we can count on it being positive. The little move from here up to here appears to be in 5 waves, so we'll see a little A, B, and C back here, and then hopefully further upside. But if it drops out of Group 2, the 4.65 here, then it's a sign of weakness, and we'll be looking at a larger structure, because I haven't been able to clearly count this structure up through here. It does count quite nicely as well. This appears to be a 4th wave here. Don't worry about my labeling too much. So in some one way or another, this would be the 1, the 2, the 3, the 4, and the 5 to this point here. So we could have a larger 3-wave correction here before we see further upside here. Anyway, look, if you are long in this market from the 450 area, then bring stops up to 463, just under Group 2 there, or under that particular low. Yeah, look, under 463 is the number. The soybean market, well, daily chart here, and we're on track. It's a possible wave 4 back into the 1400 here. Wave 4 pulls back 38% of the 3rd wave, so this is from wave 2 here all the way up here, brings it back into around the 1400 here, or the wave 4 of 1 lesser degree, which is even lower here as well. So look, we as you know, we've traded up to from 272 up to the 1500 here, and we've exited, and we're just waiting for we just want to see what this correction is. By all means short, but we trade the commodities for longer term trends, and we trade to the closest largest number, and we get out and we wait. And it's normally, in most cases, it's always good to not to trade the first leg down in this size anyway, anything under a minor degree of structure, because we need to see if it's going to be we need to see what it's going to look like. There's 11 or 12 different types of corrections, and we can halve that once we know what if we're getting a 5-wave structure down here or a 3-wave structure. So far, it's unfolding as an impulse wave, 5 waves, so it can move lower. There will be good support at the 1450 and also at the 1440, which is it's where Gann and Fibonacci meet. 144, it's the only number they meet, but there's not a lot of difference between the numbers anyway. But we use 72 a lot, and 144 is what Gann uses, and so anyway, expect resistance in here. But look, the main point here is we're trying to discover what type of move this is here. And in doing that, it's still impulsing to the downside. So we've got a larger structure. Last time we spoke, we had this sort of 3-wave structure, or maybe even a bit here, I can't recall. But we can see now that it's expanding to the downside. So we've got wave 1, wave 2, and wave 3 coming into this area through here in 5 waves. So 1, 2, 3, 4, and 5. As such, anyway, we're not really got no strategy here for the time being. We're just observing, so we won't spend too much time on that. The wheat market. Right, a couple of things here. I mean, I'll just backtrack a little bit. We figured that we may have, we were looking for wave 2 retracement, and we know that wave 2, 38, but the 61.8 retracement level was down at the 630 area through here. However, this move down through here, we thought that it made quite a nice corrective move in terms of an A and a B, and then 5 waves here for a C wave here, so an ABC for wave 2 here, and we've seen the moving up to 700 here. And what we were looking for at 700, yes, we understood that there would be a corrective pattern through here, but because it dropped even further through here, basically, if I just get my drawing tool, we were looking for a move up, then an A and a B and a C wave here, then finding support and then moving up from there if that wave 2 is in. Now that's not occurred because this sharp move down through here signifies a wave 3 here. So in reality, what we need to do now, we could still be correct, but the likelihood is that we are looking at a larger correction. So it's probably looking a little bit like this over here. So an A wave down to here, just move that, a B wave to here, and 5 waves down for the C wave, which may just come to the 650, may become below here. No, so this is like a little 4th wave here. So we've got 1, 2, 3, 4, and 5 down to here. Once this is completed here, then we will look at a buying opportunity again. The buying opportunity would be if this market does move below the 650, which is a medium level. If it moves below it and then finds support on it, then we'll go long. We'll start building a long trade in from that point there, and we'll be looking at 800 to the top side up there. So quite a nice trade, and also a 3rd wave going up as well. So a nice strong move to the upside. If it doesn't go below the 650 here, then we'll find a way in here after we've got a clear wave count coming down through to here. So a false alarm here, but let's have another crack at it when it comes around. Alrighty, the corn market. Yes, well, I just wanted to bring in another wave count that's sort of been on my mind a little bit, and this is it here. Before we had this wave 1 to this point here where the wave 3 is, and we're looking for a wave 2 back at that stage, but I don't think that's the case. So I think this now is a 4th wave to here, and we've got a 5th wave up to here. I've done a fair bit of work on this trend here. As you know, we've traded this trend from this point up to this point and higher. So, and now we're out of the market and we're waiting for we're waiting for a correction across the major trading level here. So, especially looking for wave 2 here. Now, I just want to drill in here a little bit. So our 2 counts originally were we were looking from the high here, we're looking for an A wave down, a B wave to where it is now, then a C wave down to here for wave 2, and then a move up through here. Now, the alternative is this being wave 4 here. And if this is wave 4 here, then we're going to be looking at the first high above the level. So we'll be looking at wave 1, wave 2, wave 3, wave 4, and wave 5 up here, and then coming down for the A wave over here. So all I'm saying is that's one count. The other count is that this is the B wave here, and then we will see a 5 wave structure coming down through here as such, and then moving off rather than moving off this way. So, there's a bit of a possible trade to, up into this area here that I wanted to look at. And the way that we would approach that is this. I'll just move past this one here again as well. So this is just on the 15-minute chart, and this is from the low here. This counts up here as an A and a B and a C into this area here, so it fits. But it probably counts better as a 1, 2, 3 sideways for 4, typical sideways correction for wave 4, and then up for wave 5 that's not quite finished yet. So look, if this is 5 waves up through to here, then after 5 waves we get an A and a B and a C correction, and then we'll get further upside. So what we're looking for is this to complete up to here somewhere, and then we're looking for a correction. Hopefully that will come below the 500 here, and then if support is found back on the 500 after a reasonably sort of zigzaggy sort of correction, then we can go long from this stage here and look to go long from there. So that's what we're going to do. Don't jump the gun early. Wait for this correction to come into play and trade below here and then move in from this area here on support. The indicators suggesting that there's further upside at this point here as well. And let me just have a look at the July contracts are trading higher than the 502. These are May contracts, so the July contracts are trading above 505. So there is positive there. There's more volume coming in on the July contracts than there is on the May contracts. So you may want to trade the July contracts, but the July contracts may not come back below the 500 here. Keep an eye on both of them. Okay, the coffee market. Right, just on the daily chart here to bring in the bigger picture, like most commodities coming in from the low here, we're counting 5 waves up through here, and I feel that we've got the 5th wave in place now, or very close to it up here, with this certainly this bar coming in through here. So we've got wave 4, wave 5. So then we would be looking for, if correct, we would be looking. It may not be in there yet, but can't confirm it just yet. So we'd be looking for an A wave, a B wave, and a C wave here for wave 2. Once this is in play here, then we'll be trading long through here. So not much to report here just yet. This is just the 4-hour chart, and these are the little 5 waves that we've been looking for to the upside. We're looking at 218, 220, so it's possibly in there now. I haven't just the 1-hour chart now. I haven't actually pulled all this apart here. I mean, this could still have another little push to the upside here, but I'm not that concerned about it. If you've been long from the 200 here, we had a stop at 199. You can bring the stop up to 206 or under 205 or above it, or take some profit up here, but it's not confirmed that we're coming down yet either. Do you know what I mean? This here appears to be corrective, and we could certainly have a move up. That's why I put the stop at 206, just sort of middle ground there. Alrighty, after coffee is sugar, so to speak. Right, 4-hour chart here. What we're looking for with sugar is from its low, $15, we're looking at 1, 2, 3, 4, 5 for wave 1. And then we're tracking the A, the B, and the C here. It wasn't very clean within here, I know that, but we took this little spike here as a possible wave 1 here, and then we waited for wave 2 to come back, which it did. It pulled back, covered a little gap in there, which is nice, and then we wanted confirmation that we'll get a move up. So we were looking for support on $17 to get our first position, and then let's just go in and have a look at a smaller version here. So we've been in here. The idea, we had pending trades at $17 and then $17.10, 20 and 30 in here. So those orders have been filled. Our next order will be at 17.50 on support here. Our trading is a little bit longer term here. We're looking not at the $18, we're looking at the $20. So we're looking to build into the this trade. So we'll do it all the right spots. Now the risk is that this move up here, even though I've counting it as 5 waves, it's really only 3 waves so far. So we've got 1, 2, and 3. Even when it comes up to here, it's still 3 waves up here, right? Which is 3 waves, which is 1, 2, and looking for 5 waves here. Well, that's still corrective. We'd still need 4 and 5 here. We'd still need a 5-wave structure. Once we've got a 5-wave structure here, then we know that we're going to get another 5 waves. So that means that support on 18 will get us up to 20. So there is a lot of risk in here because we don't have an impulse wave. I can see that we will move higher here in this little structure here, but it's not going to help us in the next higher degree here as such. So That's your risk, and enter at your own risk, so to speak. Okay, the orange juice trade is going well. It's sluggish, but going well. Now, we've got positions all the way through here, and we've got another position now at 165. We won't be adding any more positions to this trade here. In fact, we'll be looking to take profits into the 170 area and the 172 area through here. So that's that. But all going according to plan. We just got to sit it out. I know it's been a long wait through here, but you know, a long wait here gives a sharper move here. But I have to say this has really been sluggish moving off through here as well. So it's very sort of time consuming. Yeah. Alrighty. Well, that's it. Thanks for listening.